Hi, this is Kirk with Forex Strategy Secrets, and what we're going to be discussing is the Nth Degree Plus course and what it's all about, why it's such a powerful tool. And so we're going to go right to the charts now to demonstrate this. For this illustration, we're going to use the 4-hour. We looked at the 1 hour right in this area, and that's what the 1 hour looks like. And then we go to the 4-hour. There's what the part looked like on the 4-hour. Now, as we zoom back out on this 4-hour chart, we can see even a bigger trend. So the concept is when this indicator is on the top side of the zero line, that means the trend is going up. And you can see right here where it went below, this was just a little correction. But the point being, if you see this as the direction of the trend, that would be the direction that you would want to always be taking trades. Trade in the direction of the trend of a larger time frame. 4-hour is a really good one to use, and or the 1 hour, depending on which time frames you're working with. Now, there's one thing to know when the trend is, which direction it's going, but there's another important factor to tell when the trend is coming to an end. You can see that we have some swing highs right here going up, but you can also see the momentum of this indicator going short. They're getting closer to the zero line. So right at that point, that told you that this move right here was going to do one of two things. It was either going to do a retracement, and it did a little bit of a retracement right here, 90 pips, a retracement, and then it went sideways, and then it took off again. So that's knowing what the trend is, knowing when the trend is coming to an end, and when it's going to continue again. See, it went across the zero line again, and right in here, we verified that it was starting to go in that direction, in the long direction again. How do we identify high probability trades? Okay, I'm going to show you a couple of spots when you have, see right here's an early bird alert, when that just changed colors. And it says, okay, the trend is over, but you can see that, and it's going to come down a little bit. So that's just one thing. You can't trade by that alone and be 100% accurate because it can change a little bit. And it took a while for this one to actually form. We have an early bird special. Now, what's an early bird special? Now you have two indicators telling you the direction. Okay, one of these two bars, it went across. For sure, it crossed right at the end of this one, at the beginning of the next one. When you see that is going long, and that's across going long, that would be telling you that that's the direction. Then we had a color change right here. And right here, we had another jump up. So we call these saddles. So when you see a saddle, then it's a saddle buy or a saddle sell. Then that's a sign that you may want to consider taking a long trade. We've talked about the trend, when the trend's coming to an end, and some high probability trades, high probability setups. Also, when the news is going off, there's some high probability possibilities also. You got to wait until it determines which way it's going. Now, learn how to exit trades. Okay, I'm going to give you a little exit strategy here. Now, this webinar is packed full of a lot of information. Can you be a successful trader just by this one webinar? I doubt it, because I'm giving you just the overview of a lot of concepts. See these moving averages? When they're crossed and the color of this indicator changes, that is one of the exit signals. So if you've gotten in a trade down here someplace, right up in here is where you say, well, maybe I want to get out of that trade. We enter another trade. Where would you want to get out? When this color change or the cross, someplace right in there might be an area that you would want to get out. And possibly you get in right here, maybe. Where would you want to get out? Right over here. So those are a couple of quick exit signals that you can use is when these hot lines cross and or this indicator changes colors. Now, how would you know how to trade working a full-time job? There's a couple of different approaches to this. Sometimes people don't have a lot of time to look at the charts. Other times they might have a couple of hours a day, maybe to look at the charts. So is what you would do is I would continue to use that 4-hour time frame as one of the time frames I use. We're going to go to the day chart when the day, which direction is the trend on the day. So as long as that's above the zero line and this is the right color, that would be the direction. Now the day retraces so much that I only want to kind of find a direction based on the day. I'm going to put a line right there, and I'm going to put a line right here, and we can see it retraced about 40 some odd pips. So I'm going to put a box right here, and we'll see it on the 4-hour. Right here for the 4-hour telling us it was going long, and it went up and it retraced. This bar was where the day began, and over here is where it ends. It retraced this much. So you have to see that the exit signal we talked about, if you had entered over here, you may want to exit there. Well, there are better ways to exit, but that would have been still a good positive move. So that's how you can determine, while working a full-time job, find the direction of the day. And then when the 4-hour is agreeing with that direction, that's a strong signal, but I would still enter on a smaller time frame, like the 1 hour, for example. There may not have been good trades that day because you can see how choppy it is on the 1-hour time frame. Okay, now let's just go, for example, and say you have a couple of hours to sit in front of the computer. Now let's just go to the 1-hour time frame. And this is while you're trading, working a full-time job. You go to the 1 hour right here. It's across the zero line and it's blue. So that's an early bird special. That's what we call that. So that's on the 1 hour. Then we can go to the 15-minute. Is it ready? Possibly. It's not across the zero line, but you can say it may be ready because it's passing support. Here's a resistance level it's passing. Now let's look at the 5-minute. And you say, okay, do I want to take that to trade or not? Now this is 5 minutes, so you have a lot of 5-minute time frames. And see, there was 20 pips in there. Now when you do this method, you take smaller trades. When you're using the 4-hour, 1 hour, you may put a trade on and let it run while you're not around. Practice that on a demo account. So that's how you trade a full-time trade while working a full-time job. Is find the direction of the trend of the day in the 4-hour, maybe enter on the 1 hour, or if you can sit in front of the computer a little bit, find the direction of the trend on the 1 hour, look at the 15 and 5. When everything matches up, then you can take a trade, but expect fewer pips, and you might be out of the trade before you even leave that session. And you can take out 10, 20 pips while you're sitting right in front of the computer, because this will happen, not every day, but it'll happen enough days that if it's going sideways, come back and check on it every 15, 20 minutes. And you can still take care of your other obligations rather than just being glued to the computer. Now, there's a lot more detail than what I mentioned here, but yes, you can learn to trade while you're working a full-time job. It requires a lot of discipline. Let your winning trades run to completion. Let's say you had entered a trade over here. Well, if you say, well, I'm going to take 20 pips and get out, well, there wasn't any indication that said you should get out over here necessarily. Let's actually look at this 1-hour chart. I'm going to take 20 pips, there's 20 pips and get out. Well, the signals would have given you 40 pips. And you could have gotten back in and say it takes 20 pips, you're out here, and up here it says another 10 pips. So you could have made additional pips by waiting till the exit signals. So let them run to completion. Just because they have little drawdowns, wait until the signals tell you it's time to get out. And the way you get a lot of experience in a short period of time, take a lot of trades on a demo account. Every time you see a signal, take a trade. Yes, it may not be right, but that's where you'll learn what looks right, what's wrong, but take the trades. If you take a trade, you'll learn more about it than if you just analyze it in the past like we're doing. Take the trades, then bring the see where the trade entered, you entered and exited, and see why did I enter that, why did I exit, and analyze it. Say, oh, I saw this was good. Okay, that was a good trade. Oh, I saw this. I took a long trade or I took a short trade and it was bad, and you can learn from that. So take a lot of trades, go to the Jumpstart strategy, which is on our website free, and learn how to do the simulated trading. That will give you a lot of experience in a short period of time. Now, we talked about convergence, divergence, and congruence. That's telling you when the market is coming to an end. Price is going higher and the momentum is going lower. You know that the price is going to take a little retracement or a sideways movement. That's what the CDC tells us about. Leg one, leg two. Okay, when you're going in a move that's up. Now this had a little bit of move, it came back, it started again. Right in here, it tells you that that's the leg one started here, but this confirms that you're in leg one. Leg two starts over here. That confirms it's in leg two. Notice that leg twos are always going to be your bigger moves. And legs ones, yes, there's a little profit, but expect small profits on leg ones and a little retracement or a sideways movement. And then sweeping a trend. What is sweeping a trend? That is where you see multiple entry signals. Say you'd entered down here and you were in the trade. You say, well, I can get out, or look at your time frame. If you know what you're looking for, you may not want to get out right there, but you can re-enter the trade right there. And that gives you additional pips. And there is a small possibility that you may want to enter and you take out a few more pips up there. So there's 3 additional trades you could have taken on that move to sweep the trend. That's a trend and we swept it. We cleaned up everything that was in it. Okay, so right here's another convergence or divergence. Price is going up, momentum is going down. Right there, it told you that there's a chance that it's going to go short again, or at least not continue the long trend. Notice the hot lines were present and it changed colors. And so you say, well, gee, I can start trading that in the opposite direction or just wait until it went long again. When you see these, it's called a candy bar trade. When it came down and started going back up, there's a candy bar trade right there to enter on that when the price passes that bar right there. That's a continuation of that trend. Instead of getting up here at the that's a good entry signal as well, but you could have gotten in 20 pips earlier by doing the candy bar trade rather than waiting until it passed that fractal. So that's in the nth degree plus. So the CDC, first and second legs, blue light specials. We talked about blue light specials. I find the candy bar trade. That is in the nth degree plus course material. Trading in the zone. This is one of the most powerful things that you can do. Find on a larger time frame what the zone is. I'm going to mark a zone at the zone right there on a 4-hour chart. So as long as you're seeing the momentum here and here, that's in a zone. And that's the direction that you would trade. Trade the direction of that zone. And you'll be really high probability trades trading in the zone. There's the beginning of a zone and there's the end of a zone. Zones can go long, they can go short. And so once you recognize what a zone is or know what a zone is, you can really get good at that. Okay, there's recognizing a mega trade. It's usually based on the 1 day, and right here, this setup right here told you that maybe you could start trading short there. There's 100 pips there, but that setup on that 1 day bar gave you heads up. Then you go to the smaller time frames and you could have traded that direction. So I'm going to move that over there, go to the 4-hour, and so it could have told you that yes, you could have started trading there by just watching the day chart. That's spotting the mega trades. Salt your trade. Search all larger time frames. So if you see something on a 15-minute, go look at the larger time frame, see what direction it's going. Or if you're on a 1-hour time frame or a 4-hour time frame, search all lower time frames. Bars, I'm going to put a box around this area right here. And I'm going to put a line right here. Now, you see this on a 1 hour chart. You see this is getting back closer to the zero line. This is not divergence, it's not convergence, this is congruent, meaning the market is moving up and the momentum is moving up. This is a camelback setup right here. I'm giving a lot of terms, so you may not know what they are, but there's a 1 hour. So search all lower time frames. See what the 15 minutes doing. Let's see what the 5 minutes doing. Are there signals saying maybe you ought to consider getting into a trade here? And here's a trend. Now this is on a 5 minute, but there's an entry signal right there, right there, right there, right there, there, and there. There's a whole bunch of entry signals to sweep that trend and add on to that trade. But the point is you're salting trade. Search all larger time frames, search all lower time frames. And then what if you see some things that are getting close to being set up, but they're not? Then that's how you create your watch lists and say, yes, this is going to, it looks like it's getting close to crossing a zero line. It looks like it's been going for a long time. I'm watching for a color change. That's how you create your watch lists. And then when you see the signals, you already know some pairs that you're looking to trade. Let's review what is in this nth degree course. We talked about a few things, so I'm going to go through these quickly. Learn how to recognize a trend. Learn how to recognize when a trend is coming to an end. Look for high probability trades. Remember we talking about these things? Learn how and when to exit trades. I didn't talk about anything listed in black. I didn't talk much about those while working a full-time job. Chart patterns. So how to stop a losing trade from running too long, and how to let your winning trades continue to go, and how to get a lot of experience in a short period of time. So watch this video, take a look at this, and go back and see the areas that I talked about those things. Learn how to control your emotions. We talk about that also in the course. And focus and be consistent. Finding something that works for you and keep on doing it. We call these 15 secrets because they're right in front of everyone, and most of the time people miss them. So that's what's in the nth degree course material. Now let's look at what's in the nth degree plus course material. We talk about convergence, divergence, and congruence. That's finding the trend and telling you when it's coming to an end. First and second legs. First leg, yes, there's a little bit of profit, but you know there's going to be retracement. And when it comes out of that retracement, the second leg is going to be where you have a lot of profit. Sweeping a trend, taking all the entry signals in a trend. Blue light specials, we talked about that. I just alluded to the camelback trade, the candy bar trade. It's always done in a trend. When a trend is moving and it does a little retracement, when it comes out of those retracements, some people call it trading retracements. I just call it a candy bar trade because it's such a sweet trade. It's a high probability trade also, continuing in the trend. And trading in the zone, extremely powerful. How to do a mega trade. And that's usually on the day chart. The day will kind of tell you when it might be turning, so you go to smaller time frames to time your entries. Salt your trade and create watch lists. Those are all the things. These last two are not strategies, they're just methods of trading. So with the nth degree plus course, you get 2 acceleration coaching programs as well. You get the Fibonacci course. You get the strong and weak zones. Remember we talked about zones? Well, there are weak zones and strong zones. So if you really want to be conservative, only trade the strong zones. If you trade weak zones, expect to get a fewer pips and not as many pips. And there in the nth degree plus course, you get 8 additional trading strategies that are not found in the nth degree course, just builds upon the nth degree course. That's the whole package. In nth degree plus, you get the nth degree and the nth degree plus course. And then the trade grading system is talked about in the course material, and 21 trading labs. So there's a lot of material here. And if you were to buy this separately, $3,985. That's what we've sold all this material for separately. And from this webinar, you'll get it for only $697. So it's a great value at this price. We want more people to come in and be exposed to it and trade with us. So here's the link for the Nth Degree Plus course, which includes all the Nth Degree Plus, everything I've shown you today, and there's even more included in it, but that's the link. So copy this down. The video will be distributed. And if you have any questions, you can also email us at jed@forexstrategysecrets.com. Both Jed and I answer this particular email. And then you can call if you have some specific questions. I'll answer some questions, but I'm not going to try and teach you how to trade.